Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel and zinc.
LME 3-month nickel. Now, 6 weeks ago, I said about this market, and I quote, "This leaves us with an interesting if complex situation. You see, one could look at the whole of the early November to date action as a possible complex head and shoulders top with a split head. It will all now depend on whether the market first makes a move down to the proposed neckline of the pattern, that's currently at 28,115, and highlighted in dark blue, and then what it does when it gets there." That's the end of the quote. That was fair enough. I had seen a potential head and shoulders top and I'd highlighted it, all very, very sound analysis. And I'll expand on this further in my commentary in a short while. Then 5 weeks ago, I took a closer look at the action from November last year to January this year, and I revealed the following, and I quote, "There was also another more acute head and shoulders pattern in there as well. I've highlighted the neckline of this one in purple to help aid viewing it. It is much more acute, and I consequently have doubts about it, but the significant feature is that the neckline has been broken on the downside, and we're currently on the pullback from that, but only so far, as a now 3-pointer downtrend generated from this smaller and more acute head and shoulders top, and that's currently at 27,360. I've highlighted this in bright red on my daily chart. This makes for interesting viewing on what will happen. This does not take away anything from the larger incomplete potential head and shoulders pattern at this time. Thus, I'm minded to place some potential targets on the downside of this acute head and shoulders top. So our primary target X would be in the 25,080 zone, and a harder to reach secondary target X1 will be down in the 21,390 zone. Since then, the breached downtrend has maintained the bearish pressure, and prices have dropped below the August 2011 high at 25,195. But more importantly, below the slowly declining long moving average, currently at 24,945. The move down has not been aggressive, but it has nevertheless been somewhat relentless. 2 Fridays ago, the market reached target X at 25,080. Now we still have target X1 at 21,390 below. Now, I said earlier I would expand on the potentials below for the second less acute head and shoulders top performed since November last year. I said 3 weeks ago the following on this, and I quote, "Now, for the second larger head and shoulders top, I will not at this stage give any targets below simply because we've not had any confirmation of move below its neckline. We've only had the one close. However, I can give an idea of the size of the move. Thus, the primary move lower below a confirmed break would be in the order of $33,135, and the secondary harder to reach move lower would be $6,665 under a confirmed break of the neckline." End of quote. Since then, we have indeed had that confirmation of the move below the neckline. Thus, with the previous numbers in hand, I would have a primary target for this less acute head and shoulders top in the 24,070 zone, 24,070 that is, with a secondary harder to reach target X2 in the 20,450 zone. Presently, the primary target was reached today of all days, whilst target X2 is also still live. Now, I also said the following 3 weeks ago about a possible fly in the ointment scenario, and I quote, "You see, these head and shoulders tops are fine, but what if one or both of these head and shoulders tops turns out to be head and shoulders continuation patterns, or even something else completely? What then?" Well, I think that's a good question, as having such a pair of the same patterns at the same time may lend itself to such an outcome. The only thing I can say to that is to keep a close eye on any such deviation in one or both of these patterns. I can only add, and that's the end of the quote, I can only add right now that no such outcome seems likely right now. The head and shoulders tops look the way the market has chosen to go. LME 3-month zinc. I said 3 weeks ago that there was a hell of a lot going on here with all the multicolored trend lines and patterns seen here. Since then, well, nothing has much changed. There is a hell of a lot going on here, all at the same time, despite the relative trading range that we've seen since. Let's start once again by looking at the key support and resistance levels. Below and highlighted in red, we have the lower time, currently at 29.22, the big old 2015 to 2020 bullish Andrews pitchfork. We also have congestion between 27.91 to 28.25, which includes the June 2021 low at 28.10, the July 2021 low at 29.06, and the August 21 low at 29.17. All these had previously played their role in supporting the lower time, and as a consequence, the market. We also have down here below the middle time, currently at 28.21, which is highlighted here in purple, of the more recent late May to mid-August bearish shift pitchfork. The market previously used this time as a base to push up over the nearby medium moving average, currently 30.80, which is currently being used as an attractor for the market. The upper time, currently 33.57, was tested in late January, breached but held as resistance. Immediately above the market, we have the combination of the flattish neckline, currently at 31.82, of the September-December 2022 reverse head and shoulders pattern, as well as the now declining short medium moving average, currently at 31.57, and the long moving average, currently at 31.85. We also have nearby the June 2018 high at 32.20. After this commentary, I'll retire both the primary target X1 in the 35.47 area and the secondary harder to reach target X2 in the 36.95 area for the September to December 2022 reverse head and shoulders pattern. Target X1 was doable in late January, but it now no longer looks doable as the main market mover is edging prices lower, and more recently sideways to lower has been the purple highlighted tines of the May to August 2022 bearish shift pitchfork. Finally, I have something on which I've spoken about a lot. It is the March 2020 to June 2022 ascending expanding wedge pattern, currently 40.89 to way up off the top of my daily chart. The lower trend line is highlighted in dark blue in the upper part of my daily chart. There are some outlandish potential targets for such a long dated and wide pattern, so to keep an element of realism in here, I have suggested in the past and still suggest only looking at these possibly as primary target X for such a pattern. That's down in the 25.45 zone below. This was for the back of the diary and to be reviewed maybe once a year or so. However, the market seems to be contemplating this longer term pattern and its targets right now.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.